Welcome to Business at 9. I'm Shubhani Gharat, and joining us from Chennai is my colleague Jude Sanit. Now, Jude, the Wall Street is seeing a muted session. In fact, today on Monday, with Nasdaq trading lower by more than 30 points, while Dow Jones is also in the red, though marginally. The S&P 500 is holding just above the flat line. Concerns over complications in the US-Iran-Oman talks are weighing on the sentiment, keeping investors cautious.
Meanwhile, the U.S. armed forces have doubled down on the blockade of Iran following U.S. President Donald Trump's statement signaling to let economic pressure do the work in Iran as opposed to launching fresh military strikes. The U.S. president said that America was only quote-unquote semi-negotiating with Tehran on the Strait of Hormuz. This even as the U.S. Central Command has said that it has already disabled 2 vessels and redirected 55 others as part of the blockade. On the other hand, Iran has appointed Mohsen Rezai as its new Supreme National Security Council chief and has said it was nearing a final pact with Oman to define new shipping lanes between the 2 countries through the Strait of Hormuz. Iran reiterated that the US must meet other conditions, including compensation and an end to sanctions and military threats. In addition to that, Tehran also said it has no concerns over the new Pakistan-Turkey-Saudi security pact.
Now let's take a look at how the markets fared today. It was a range-bound Monday with Nifty closing near 24,600 points, lagged while mid-cap surged. PSU banks and pharma stocks corrected while realty emerged as the top sectoral gainer. Titan and Tata Consumer were the top gainers in Nifty. Today, my colleague Harsh is here with more details.
Well, it was all earnings heavy, essentially. And when you're looking at stock-specific action, it was earnings heavy. But let me first give you the broader picture. The broader picture is realty, of course, did very well for itself. Just 2 stocks within that realty basket sitting in the red. So the breadth was also positive where realty is concerned. And when you're looking at the losers, defense was one of them and PSU banks was the other. PSU banks, one of the top losers, even on the index, was SBI, and that was actually something which was knocking on other PSU banking stocks as well. You had the likes of a Canara Bank, a Union Bank, where there was pressure pretty much all through the day of trade. There was also pressure among the PSU power lenders. PFC, REC were some of the top losers on the Nifty 500 index today. So you saw some steep cuts, 6 to 8%, on the back of a weakish kind of a set from PFC on a standalone basis and even on a console basis, where a predominant amount of the profit growth has come in from actually provision reversals, and that's what's really pressuring those particular counters. In fact, NIM has contracted and profitability was driven by by provision reversals which came about. Outside of that, a Bharat Forge was down 7% as well. Again, a weak set of numbers driving that stock lower, so that was one of the other ones in focus. NLC, Inox Wind, you also had an Indus Towers which was under pressure. All of those lost nearly 5% plus in the day of trade today. Again, stock-specific action to the positive. You saw Hitachi Energy, very strong set of numbers, 11% higher on the stock price. Paytm was up 10% on the back of the MDR, which will likely come through. And if that does come through, the kind of benefits that will accrue, you had a Bernstein note which spoke about that. Sirma, Sumitomo, BEML, as well as Schneider, which is some of the other big gainers in trade today. So that was the tilt of the trade. While nothing visible on the indices, whether it's the Nifty 50, small cap or mid cap, there were plenty of buzzers in the broader market, which kind of kept the markets alive. So that's the take with regard to today.
Well, plenty of buzzers in the broader market. That's the verdict on the markets today. But moving on, the Nifty could see a rejig soon. In fact, the BSE will be added to the Nifty 50, while Wipro will be removed from the index. Shesha joins in with some of these details.
Well, yes, so Nuvama Alternative and Quantitative Research has come out with a report on the likely inclusions and exclusions from indices in the September rejig. And first up, let's talk about Nifty, where they're expecting BSE to, in fact, replace Wipro, where they are penciling in about $741 million of inflow for BSE and about $246 million of outflow for Wipro on its likely exit. Nuvama says that if Nifty Indices Committee makes any methodology changes gist today. The meeting is likely to happen today. Then they also believe that TVS Motor could be a potential contender to actually replace Wipro. So TVS Motor, BSE are the two contenders that they've spoken about. As far as the Nifty Next 50 index is concerned, Wipro could get added, and this could see an inflow of about 95 million US dollars. Vedanta Aluminium, Hitachi Energy, Idea, Polycab and BHEL are a couple of other likely inclusions, with Indian Hotels, REC, United Spirits, Shree Cement, Lodha and Mascot Dock likely to get excluded. So yes, several changes that are expected to happen in the Nifty rejig in the month of September this year.
Right. Now, ICICI Prudential Asset Management will acquire PMS business of ICICI Securities. The deal is valued at 1.2% of the actual AUM transferred. My colleague Anurag Joshi gets us the details.
ICICI Prudential Asset Management is acquiring the portfolio management services business of ICICI Securities. ICICI Pru AMC said this in an exchange filing. ICICI Pru AMC's board has approved the acquisition of ICICI Securities PMS business today. The acquisition is via a slump sale as a going concern, together with the assets and liabilities of the target business. The execution of the business transfer agreement between ICICI Prudential AMC and the ICICI Securities will take place, and the acquisition of the PMS business is subject to the approvals required under applicable laws according to the filing. The deal would enable the firm to broaden its existing portfolio management services offerings, ICICI Prudential said in the filing. The transaction is expected to be completed within a year, and the PMS services of ICICI Securities cater to HNIs. In FY 2026, the revenues of ICICI Securities PMS was at almost 21 crore rupees.
Moving on to news from the mutual fund space next. SEBI's annual report for FY26 states that negative returns across mutual fund schemes surged nearly threefold in the fiscal when compared to the previous fiscal of FY25, with technology and small cap funds among the segments that saw significant pressure. We take a closer look at these numbers, what drove these weaknesses, and what it means for investors. Kavita joins us for more on this story.
The headline from SEBI's latest data is striking. The number of mutual fund schemes delivering negative returns in FY26 increased almost threefold, from 243 schemes to in FY25 to 731 schemes in FY26. Now, but the bigger question for investor is which type of mutual funds were actually hit the hardest. And when we break the numbers down, one thing becomes clear: the pain was not evenly distributed across the mutual fund universe. Let's talk about the first category. This is the technology funds, among the biggest casualties. Technology and digital focused funds were among the worst performers. Now, in an analysis of almost 556 equity mutual fund schemes for FY26, Quant Tech Fund fell almost around 47.2% on SIP investments, while Motilal Oswal Digital Fund fell around 35.4%. Talking about other technology focused schemes, also saw steep declines. You can talk about HDFC Technology Fund minus 31.8%, Tata India Digital Fund, one of the best performing schemes, saw a downturn of almost 30.1%, ABSL Digital Fund 29.6% down return. Now, these numbers show just how painful a concentrated sector bet can become when that particular sector goes through a correction. The other category is small cap funds, major pressure point for them. Now, if we look at Tata Small Cap Fund, down almost 32.6% on SIP investment during the period analyzed. Now, at the category level, small cap funds were among the weakest performers, with the average one-year SIP return around minus 15% as of March 25, 2026. The other category is flexi cap funds, again negative but relatively more diversified. The average one-year SIP return of the category was around minus 14% as of March 25, 2026. Now, large cap, relatively defensive category was also not spared. The average one-year SIP return for large cap scheme was down around 14%. Now, multi-cap fund were also under pressure. The average one-year SIP was around minus 13%. Now, here's the most important number. Now, out of 556 equity mutual fund schemes analyzed for FY26, 486 were in the negative territory and only 70 delivered positive returns. Now, what's the takeaway? The bigger takeaway is FY26 has essentially reminded investors of three things. First, Equity mutual funds do not provide guaranteed returns. Second, diversification reduces concentration on risk, but it does not eliminate market risk. And third, investors should judge an equity fund over a sufficiently longer period, preferably looking at almost 3, 5 or 10 years performance, rolling returns and performance against its benchmark rather than, reacting to a single financial year. So that's the biggest takeaway for investors.
Kavita dissecting and delivering some truth bombs over there. But let's move on and figure out, more about InfoEdge. InfoEdge's Q1. In fact, InfoEdge reported a strong Q1 with profit rising 51% year-on-year to 446 crore rupees, while revenue grew 11% to 881 crore rupees. EBITDA jumped 29% to 341 crore, with margins improving to 38.7%. My colleague Ashesha now is here with more details on this.
Well, yes, so InfoEdge has reported very strong set of numbers for the quarter gone by, with revenue surging nearly 11% in the first quarter of FY27 to come in at about 880 crores. Cash balance, meanwhile, stood at above 5,000 crore, which is another positive, and profit after tax saw a jump up of nearly 50% on a year-on-year basis. Let's talk about each of the segments and the kind of numbers segments have reported. And let's start with the recruitment segment, which has been the key growth driver for the company. Billings are up 17.5%, revenue for this segment is up 13%, and EBITDA also saw a jump up of nearly 25% YOY. Meanwhile, as far as 99 acres is concerned, it is now nearing break-even, with billing surging nearly 17% on a year-on-year basis. Matchmaking segment has reported improved growth, with Jeevan Sathi billings rising 14% YOY. Siksha, meanwhile, continues to report weak set of numbers. Billings have declined on account of lower Google search traffic, so that is continuing to weigh heavy on the Siksha business. But the management outlook continues to remain very positive. First up, they've spoken about the recruitment business, where they say that improving hiring across AI is aiding monetization for the company. 99 acres focus on revenue conversion and break-even continues to remain a key case point for this company. So all in all, numbers across most segments continue to remain very positive, especially the recruitment segment, which is the key growth driver for the company, and that has reported very strong set of numbers. And the margin and the management outlook, most importantly, across all segments continues to remain very positive.
Well, shifting focus to Parliament action next, and speaking in the Rajya Sabha was the Finance Minister Nirmala Sitharaman, who was weighing in on the taxation bill, where the FM clarified that the legislation does not impose any tax on UPI transactions. In fact, the FM also assured that the digital payments through UPI will continue to remain free, addressing concerns over a possible tax on UPI usage. Let's listen into what the FM had to say.
No. UPI has remained free for consumers since its launch, and every Indian will continue to make this instant digital payment without paying a transaction charge.
Now let's move on. After Pune, in fact, FDA has suspended Blinkit's Malad West Mumbai's food license with immediate effect over food safety violations. FDA reported serious hygiene lapses at the Blinkit facility as expired food items were found during inspection. My colleague Akanksha is now joining in with more details on this. Akanksha, take us through this update.
That's right. Blinkit is facing action from the Maharashtra FDA over food safety violations at one of its facilities in Mumbai. The FDA suspended the food license of Blinkit's Malad West facility with immediate effect and has also, in fact, ordered the facility to stop its operations. Now, this action comes after an FDA inspection at the facility found several food safety violations. In fact, the inspection found cockroach infestation at the facility. The FDA also found the expired food products being stored there. Apart from this, the regulator also flagged improper storage of food products at the facility, which of course raised concerns over the way food items were being handled and stored. Now, following this findings, the FDA has taken action against the facility and suspended its food license with immediate effect. Importantly, the action is against the specific Blinkit facility in Malad West, where these violations were found. So definitely the FDA's actions now puts the focus on food safety violations and hygiene standards at quick commerce facilities, especially as more consumers rely on these platforms for their daily food and grocery needs.
Right, Akanksha, thank you so much for that update. It is now time for us to slip into a very short break on Business at 9. You don't go anywhere. We'll be right back in a few minutes.
Welcome back. You're watching Business at 9 with Shibani and myself, Jude Sanath, right here on ET Now. Moving on to some court action next. The Supreme Court may soon hear a review petition challenging its recent ruling on the notional income of homemakers in the motor accident claims tribunal cases. My colleague Anurag Shah joins us with all the updates.
Supreme Court is likely to hear review petition in notional income for homemakers case, and as per our sources, a review petition has been accepted by the top court, and the court is likely to hear the review petition soon. On 11th June, an order was passed by Supreme Court to fix the notional income for homemakers as 30,000 rupees per month, and in that connection only review petition has been filed because insurance industries is seeking a methodology to calculate the compensation amount, and insurance industry is also mentioning a previous ruling by court where in a similar case, in a similar type of a compensation case, a court award mentioned a wage amount of 2,500 rupees per month in year 2003. So review petition is seeking a methodology to calculate the compensation amount. Previously, most of the insurance companies, general insurance companies, has increased their provisions after the court order, and because insurance industry is expecting that their loss ratio may increase and overall compensation for motor third-party cases, MACT order may increase after the Supreme Court order. So in this context only, review petition has been filed seeking a methodology for the compensation amount, and the top court is likely to hear the review petition very soon.
Right, Anurag, thank you so much for that update. Now, civil aviation is in spotlight as Centre receives requests from airport operators to relax airline operating norms. My colleague Kuldeep filed a report earlier today.
Well, the government has confirmed to the Rajya Sabha that the Airport Authority of India has received a formal request from airport operators seeking relaxation in airline operating norms. The Civil Aviation Ministry informed in its written response to the Upper House of Parliament that airport operators and other key stakeholders have approached Airport Authority of India asking for a waiver of the existing policy. The current rules restrict operators of major airports from running their own airlines. Well, important to note here is that in the month of June, news surfaced that Adani Group had approached the government to relax norms. However, Adani Enterprises later had denied any plans to launch its own carrier. No, but this question today was asked by the Rajya Sabha MP John Brittas. He asked that whether the government is considering any amendment or relaxation of the existing policy restricting operators of major airports from holding substantial equity in or operating scheduled airlines. In response to this question, the government stated that it has the Airport Authority of India has received formal request. However, the ministry also stated that the matter has not yet been examined by the Civil Aviation Ministry. In fact, in its response, the ministry also stated, and I quote here, there is no such government policy restricting operators of major airports from holding substantial equity in or operating scheduled airlines. However, the extent contractual agreements relating to some airports under public-private partnership contains certain restrictions on scheduled airlines and their group entities associates from holding equity share of the concessionaries. So this was the response of Civil Aviation Ministry to the Rajya Sabha today, where it confirmed that the ministry, the Airport Authority of India has in fact received requests from airport operators to relax airline operating norms.
And staying with more news from aviation, the investigation into the Air India AI 2379 turbulence incident is now expanding internationally. Times Network has learned from AAIB sources that France's Bureau of Inquiry and Analysis for Civil Aviation Safety, or BEA, will join the investigation into the incident involving the Airbus aircraft. The BEA, remember, is France's independent aviation accident investigation agency and routinely participates in investigations involving French-built aircraft. My colleague Shafali from Times Network brings us more details about this investigation.
The investigation into Air India 2379 from Phuket to Delhi incident is now widening, with international aviation safety agencies and aircraft manufacturers stepping in to assist. Sources said that France's Air Accident Investigation Agency, the BEA, Bureau of Inquiry and Analysis for Civil Aviation Safety, will now participate in investigation being led by India's AAIB. Airbus too has confirmed that it is providing technical assistance to the investigating authorities in accordance to ICAO Annex 13. The aircraft manufacturer says a team of specialists is being dispatched to assist with the probe. Now, AI 2379 was an Air India flight operating from Phuket to Delhi. The flight encountered severe turbulence during its journey, leaving passengers and crew members injured before the aircraft landed in Delhi. And as the investigators work to establish what happened on board that flight, the involvement of AAIB, France, BEA and Airbus means the probe will now have access to wider technical expertise. The focus ultimately remains on reconstructing the sequence of events and determining exactly what led to the incident on board.
On this edition of Business at 9, goodbye from me, Shabani Gharat, my colleague Jude Sanit, and our team at ET Now.